Hi, this is Mohan Kumar from Brainy Bulls, and I welcome you to another episode of Nifty chart analysis using the Triple Threat Intraday Strategy. And in this video, we're going to look at the Nifty chart for April 25th, 2023, right? And let's quickly get into the charts. Okay, so you're looking at the two chart view in the trading view platform. So we have the Nifty spot and the Nifty futures chart on side by side set to a 3 minute time frame. So before I bring on the three indicators, let's have a quick look at the price action for today. The price opened almost flat, and then it had a nice move to the upside, and then actually it retraced back, and then it moved back to the same high point, and then it actually retraced back again, and then it moved higher, and then finally it got some correction towards the end. Today was the fin nifty expiry, so looks like to be a very volatile day, right? So I think looking at this, everybody's we should be like to catch this particular move right here, right? And possibly this move, right? And possibly, yeah, even this, and of course this, and now this being the end of the day. But anyways, no, these are all the five good moves, I would say. Where we could have made some good profit. So there were five opportunities in the market, right? um, like we always know, based on the strategy that I use, I do not trade between 9:15 and 9:45 and 2:45 and 3:30, right? That's the entry condition. And so between 9:45 and 2:45, it's a good 5 hours, and that's what I use uh, for my entries and exits. So let's try to bring the indicators on, right, and see what kind of entry and exit signals the indicators have given, in conjunction to the price action patterns and candlestick patterns. Okay, so it's going to be very interesting, I believe. Okay, great. So the first indicator I brought on is the price levels or locations, is what I call, right? It has the major locations where the price could have a kind of a turning point. It could have some strong resistance or strong support, and then price can continue or reverse, right? So that's the location. If you haven't looked at my any of my previous videos, please to go have a look at those videos. I've talked a lot about these indicators, what they are, how they are to be used, how these signals are to be read, and when you have to take trades. A lot many details are covered, because we only talk about the price action for that particular day, and there are so many other patterns and concepts which cannot be covered in the same day, right? So in this particular video, we're going to look at the chart for uh, April 25th, which is today's chart. So let's see, let's bring on the indicators one by one. The second indicator is the market participation, which are represented by the dots. We have three dots again, right? White has been replaced with black, because now I'm using the light theme. So the black, blue, and green are the three major participants who move the market higher or lower. And then we have the trend meter. Of course, it talks about the strength of the trend, right? And any conflict with the price, which is a major indication of the move, the direction in which the price is going to move. So now the price opened flat. No, kind of opened above the previous day's high, not far away from the high though. But the very first candle moved, below the previous day high, and look at the moving averages, right? So we do a lot of checks before the market opens and checks post the market opens. So we don't want to talk about all those checks now. So just look at the moving averages. They're all like moving firmly, to the higher side, right? All three moving averages. So the trend is kind of, it's on the upside, right? And the price is nicely pulling back to the moving averages. Look at the trend meter. It's not either to the red or the green. It's right in the middle. So we observe the market. If the price is caught between two major locations, the price might tend to move sideways. But let's see what happens. So the trend being on the upside, as indicated by the moving averages, the price is firmly moving to the top, and it even broke the previous day high. Okay, and it's moving higher. And so a good trade is I don't trade the breakouts. I've talked about that in my prior videos. I don't trade breakouts, but what I do is I rather trade, retracements to the locations which had a breakout. So in this case, the previous day high is a major key location which has had a breakout, and the price is quickly retracing back to the previous day high, as you could see. And here you could see a lot of participation, right? This particular, there is a green candle nicely that has come up, as you could see here on the futures chart as well, right? So this is the candle I would put my money on. The low of this candle is going to be my stop loss. The high of this candle is going to be entry. So I know it's going to be a very small trade. Look at the indicator. This has almost gone to the red zone, but this hasn't, and it's nicely pulled back. And so has the price. It has retraced back. Since it's a major location, post a breakout, retracement to the same location with a lot of participation indicates the price will move higher, and that exactly happened. And we know the reward is going to be not that great because we have a day's pivot, resistance here. So this is going to be a target, and price exactly did the same. Price moved firmly, and then it took resistance right here. Okay, so this is the first trade of the day, which went, as per our strategy, the signals that the strategy has given us. So I'm just going to quickly remove the drawing so you could look at the charts clearly, right? Okay, so look at the trend meter. The trend on this particular chart, right? I mean, it was in the red zone. The price moved higher, as you could see, it's very clearly, it's here. But look at the trend meter. It has already shown some kind of weakness, right? On the other hand, on this particular side, the trend has now moved into the red zone. So we have taken our profits, but are we going to look into getting into a trade? Yes, no, the trend is almost weakened here. So we need to check for participation, right? There is a good participation, right at the zone. Perfect. And we need to wait for candle to close below this and look at this. The price has nicely retraced back to the green moving average. In this case, the price has even retraced below the moving average to the blue moving average. So it's confirming that the trend is moving down, and it's kind of like moving quickly. So this candle right here, the hammer candle right after this participation, is our entry candle. The high of this candle is going to be a stop loss. The low of this candle is going to be entry. So we buy put options right here, and we know again it's going to be a low probability setup. We don't have a lot of reward, but again minimal risk, and we do have one is to three, one is to four kind of a reward. So this is going to be our target, and price exactly came back to the point where it initially had a lot of participation, right? And then this is exactly the move that you would have capitalized on, right? And you would have taken a second trade, which again, it's not much though, but again, um, it's kind of like a good one is to four risk to reward ratio. So two trades in a quick succession, and both were like in our favor as predicted by the trend. Okay, now if you look at it, the trend meter has come down to the green zone, right? And both these charts now, the trend indicates that it has bottomed out, and we know we are in an uptrend as indicated by the moving averages, right? It's a strong uptrend. Look at the black moving average, the higher time frame one. It's firmly on the upside. The price has nicely retraced back to the previous day high, which is a major location, and also to the black moving average. But look at the price even went further below, right? So there's a pinch of doubt, if this retracement is going to be a major retracement where the prices go even further and down to the day's low, or if it's going to retrace. So we have to wait for the price to go back into the EMAs, come back to the same, or just show some kind of retracement, and then we would have entered back into the trade. But that didn't happen. The price swiftly moved, steering through the EMAs, right? And it moved all the way up to the point where there was like kind of a lot of participation, and the price moved down, right? Same point. So I know for a fact the price is going to move further down from here, but it is quick. There's not much of participation here, but there was a kind of a participation. The candle was very small. Before I could react, the price moved swiftly back down to the same low point as before, as you can see. Now the price is now giving us confirmation that this is a strong support zone, and looking at the volume, looking at how the price is reacting when the price comes back to this level, looking at the price trend, Now this is a zone where I would plan to take a trade. An important thing to notice is the price has formed a double bottom, right? And this happens to be a key location where we had a lot of participation, and the price swiftly moved to the top, right? And then the price actually retraced quickly back to the same point, and you could see the red candle here indicates a lot of volume, and the green candle, that follows the red again indicates a lot of buy volume back in here with a lot of participation. The location being key here, and look at the price trend. The price made to the same low point, right? Even below it went even below, but it just closed a little higher. But look at the trend. Okay, the trend is still, like it hasn't even dipped. It just barely past the midpoint, right? Now, this is a price trend conflict. Now, this gives a good signal. The trend to the upside is very strong considering the price action for the day. Now, this is the move that we would capitalize on, looking at how quick the price moved from the bottom to the top and from the top to the bottom, right? With a lot of participation, this is really going to take or move the prices much higher. And that exactly happened. So we would have taken this candle as our entry candle, right? The stop loss is right below this candle. We know for a fact if this particular candle's low is broken, now the price is going to fall further. So this is a very nice candle to put your money on, and the high of this candle is our entry. So we always trade one candle, as a keeping it as a risk, and then we actually move as long as the price moves, is way well below the red zone. We hold on to a trade, and when the price moves closer to the red zone, and look at the previous high points and the participation that's coming in, now this exactly is the place where we would have taken our profits. So a quick move, when you're trading in Nifty options, will give you significant profits, right? So this is a fantastic move. This could be the trade of the day, looking at how quickly it moved without any kind of a red candle. The price moved quickly back into the previous high point, even reaching and moving above the previous high point, right? And there is a day's resistance, right? Pivot resistance. So this is the place where we would know that it's going to take some kind of resistance. So exactly that's what happened. And we don't get into a trade, even though the trend meter indicates that it is into the red zone, right? Now here the trend indicates that even though the price moved to a higher high, look at the trend meter, right? It has not even gone into the red zone. So this indicates that the strength to the upside has weakened, right? And it's going to now this can be confirmed if the price retraces back to the green moving average, right? And then if there is no further follow up to the upside, that is how you would actually get into another trade. But now we are way past 230 and 245. Now if you're an aggressive trader, right, you could have very well taken a trade, considering the fact that the trend meter shows that the trend has given up, right? And you have a nice retracement to the moving average. We don't take the trades right at the top. We wait for the price to retrace back to the moving average, and this is the red line is the daily resistance. The price actually retraced back to the moving average, moved back to the daily resistance as indicated by this red candle right here, right? And then our entry point is right below this red candle, and your stop loss is going to be right above it. So this is also a nice move, but again it is past 245. So if you are looking for additional trades, after having three trades in your favor, if you want to put some money and put your money on this particular candle and take this trade, when it good, it's indicated by the strategy that it's a good trade, you could have taken. Otherwise, three trades, if you're not greedy, you could actually settle with that, and it's a wonderful day again. See, we don't actually, as you might have realized, the kind of risk we take is very minimal. At the same time, right, the reward that we get is multifold, right? Every single trade is based on the fact that you don't lose a lot. So every signal that the indicator gives you, you can very well go for it. For example, we could have taken this trade as well, right? Just the fact that now this price closed below the moving average. See, moving average is not a straight line like the locations. It's kind of like a rubber band, right? You cannot actually fix the moving average and say that if the price is moving below the moving average, now it's going to go lower, right? So this some kind of leeway or flexibility around the moving average that you might have to factor in. But no, I'm a very conservative trader, and I trade based on facts, and whatever I see is what I act upon. So when the price actually firmly moved from the top all the way down to this black moving average, and it even went lower, closing below it, then I become very cautious. I don't jump into the trade right here. I wait for the price to get into the moving average, right? Because it even moved further below the previous day high and below the low point here. But at least in this candle, there was a bit of a support. But this candle was kind of very frightening that this retracement might even go lower, right? But that didn't happen, so I did not take a trade here. But if you're an aggressive trader, right, and if your signals are intact and you also have a beautiful location of the participation, you could have very well given a shot, right? No, it's a low probability setup. In fact, you could have went in with a half your position. Like if you traded 10 lots, right, you could have traded with 5 lots, yeah, okay, and still you could have nicely got into a profit. But having said that, that's purely optional. You don't have to get into any trades, which you're not confident about. And likewise, another opportunity here, you know for a fact that this is the place where the price saw kind of like a huge participation, and the price moved down quickly from here. So you know that when the price comes back to the same level where there was a participation, the price is going to move further. And look at the trend meter; it is into the red zone, right? So you could have again anticipated that the price may quickly move. Looking at how the price reacted throughout the day, this may quickly move. It did happen, but again, you being a conservative trader, you always wait for the price to retrace back to the moving average and giving a second confirmation if the price is going to go down or not, right? In this case, again, it fell sharp, right? And now you missed a couple of opportunities, but that's okay. You played by the book, so you don't have to worry about that, right? However, when the price moves back to the same low point, right, that is where you now have to be having the right, state of mind to go in. When the price moved to the same low point, it's a double bottom. So you should have realized that, looking at the trend, which is on the upside, looking at this making a higher low, right, and the price trend again making a higher low, and it's the price has almost reached to the low point with a lot of volume. Now this is a beautiful trade. So what you might have got in both of these trades, you might have accomplished in this one particular trade. This is a high probability setup. If you would have gone with half the size in these two trades, the kind of money you would have made in this one single trade, right? So because this one is a high probability setup, and you would have gone with full on, right, 10 lots probably, right, and then you would have taken the complete uh, uh, right, and you'd have made good profits right away. Okay, so that's how we actually have a solid reason behind taking every single trade and not taking a trade, right? So we trade based on facts. We trade with minimal risk. So even as a beginner with one lot, right, you could still make good profits. For example, the at the money strike price today was around 50 to 60 rupees. So one lot would have costed you roughly about 3,000 to 4,000 rupees, right? And if you have traded with 2 lots, it's like between 5,000 to 6,000 rupees, and you could have easily made about 3,000 rupees on this particular trade, right? On one single trade. So if you would have taken 3 trades, you could have easily made close to 6,000 rupees in today's by just investing 6,000 rupees. If you like what you're seeing, if you like the content, please do like this video, and please do subscribe to my channel to get timely notifications, on the videos I post on a daily basis. And there is a beautiful course I've formulated. It's an end-to-end course on this particular strategy, which covers a lot more topics, and it's targeting the beginners and intermediate. So if you want to know the details about the course, it's an online private one-to-one course. And please do contact me at my WhatsApp and email ID. And until I get back to you with another video, stay safe and take care of you and your loved ones. Bye bye.